These are things I wish I knew while I was in college and working and making a little bit of money, or even at 24 when I landed my first real job. I wish someone had told me all of this. Hi guys, welcome back to my channel. My name is Zena. If you're new to my channel, here on Easy Gans, we talk about daily choices and actions that we take to create and live an elegant life while we work towards financial freedom. In today's video, I will be sharing with you guys some goal-setting strategies when it comes to investment that would ensure a fireproof financial independence journey. These are things I wish I knew while I was in college and working and making a little bit of money, or even at 24 when I landed my first real job. I wish someone had told me all of this. If you follow or listen to Dave Ramsey, you will know that the rule of thumb is to invest at least 15% of your total income. First, take advantage of your 401k plan. You want to contribute at least the very minimum that your company matches. So for the purpose of this video, we're going to go with $100,000 a year, which means your plan is to put away $15,000 of that $100,000 into a retirement account. For instance, your company matches 3%. You want to be able to contribute a minimum of $3,000 into your 401k plan so that you can get an additional $3,000 match. You can go ahead and put more, but before you do that, let's go to step number 2, which is max out your traditional or Roth IRA contributions. So the Roth IRA or the traditional IRA are also tax advantage accounts, just like the 401k account that you want to take advantage of. I personally prefer a Roth IRA account because with Roth, you're putting post-tax money, which means that you've already paid taxes on that dollars. Hence, when you cash in that dollars at retirement or whenever you're able to cash it in, you will not be expected to pay tax on that money. That way, you know exactly what you're worth. Like if you have $100,000 in that account, you know that every dime of that $100,000 is yours, as opposed to a percentage of that money being taken away in taxes. So anyways, as of today, 2020, the maximum allowed contribution in your Roth IRA is $6,000. So out of that $15,000, you've put $3,000 into your 401k because your company only matches 3%, for instance. You want to go ahead and max out your Roth IRA by contributing $6,000 of that $15,000 into your IRA account. Whichever one you choose, it's still a good investment option with all the tax benefits, and you want to take advantage of that. Now you've maxed out your Roth IRA and you put in $6,000 in there. You put in the maximum match from your employer of 3%. So $3,000 plus $6,000, that's $9,000, which means you have $6,000 left. At this point, you want to go back and contribute that into your 401k and you want to continue to do that until you're able to max out your 401k. I believe this year the maximum contribution you can make towards your 401k is $19,500. So you want to, after you've maxed out your Roth IRA or your traditional IRA, whatever one it is, now you want to go back and start contributing into your 401k again until you reach the maximum. The reason you don't want to put all your money in your 401k before you've been able to take advantage of your Roth contribution is because most companies a lot of times don't have a lot of good investment options in their portfolio. So you want to have the option to put your money exactly where you want it to be, where you have several options, for example, in a Vanguard account or in a Fidelity account or wherever it is you choose to invest, where you can actually pick your own investment options and you know what their rate of returns is. So after you've taken advantage of that, then you want to go back and try to max out your 401k plan if you still have some balance left. The last thing that I'm going to talk about is your HSA. A lot of people don't know about this, but your HSA is also a tax advantage account that most people don't take advantage of. The question that most people ask is, how do I cover my health care costs at retirement? Or if, for instance, I retire early, how am I going to sign up for insurance and all that stuff that you're able to get at a discounted price through your company? Well, that's where your HSA comes in. not everybody has the option to contribute into an HSA. I believe most of the people that are eligible to contribute towards an HSA are people with like high deductible plans. So if that's something that you have available to you, it's also a vehicle that you want to completely take advantage of. Contribute the maximum that's allowed into your HSA and just put that in an investment account and let it grow. That's also another way to build wealth. Now, after you've maxed out your 401k, you've maxed out your traditional or Roth IRA, you've maxed out your HSA, now it's time for you to look into a brokerage account. Now, a brokerage account is usually not a tax advantage account in the sense that you're going to pay taxes on whatever earnings you make every year. It's not something that is piled up until you retire. So it's usually my last option when it comes to investing is to take advantage of a brokerage account. At that point, you've maxed out all your tax advantage account. It's okay to look into a not tax advantage account. I understand that maxing out your 401k, maxing out your Roth IRA, and maxing out your HSA is not something that we can do right away. But it's so important to set goals like this and work towards them so that when you get your next raise or when you're doing all this side hustle and you have all this extra income coming in, you have a goal that you're working towards. And so that money is already directed to somewhere and something that's going to be very productive for you. In doing these kinds of things, you can be rest assured that you will be able to attain financial freedom sooner rather than later. I hope you've enjoyed watching. If you like this video, please give it a thumbs up or leave me some comments down below. And I'll see you guys in the next video. Bye, guys.